The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and this is the Tuesday edition. I'm here Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock till noon. And the interesting thing about today, this is December the 11th, is that he's my guru as far as the TFNN site is concerned, because Mike Comey always just comes right through in stellar fashion. Just amazing how he's able to accomplish so many things at once. A veritable Penn and Teller of the of the technology world. And thank you, Mike. Right there on the front page, you will see half price. I don't think I've ever done that before. This is a special sale. There was a very nice response, first of all, to my webinar, people wanting to do it and people who did it. And but I had a number of people ask me and say, at this particular time, we just can't do the webinar, and maybe we'd love to do it at a later stage. But are you having any sales or anything like that on your CD? Because we've heard you talk about it, we've seen it when you've shown it in Tiger TV. We've got a glimpse of it, and we've seen all the different chapters, seen how thorough it is. It's been going on for years and years now, and people have so often spoken about it. And how about some kind of how about some charts? That's what the question was right there. Absolutely. How about some charts? Charts are right here. I had the charts up. I took it down because I wanted to do something. And then, of course, I forgot. Nothing unusual there. Right there on the charts, you'll see the 120-minute chart, peak D, started a brand new A, B, parallel wave count, E to C. This is what my attendees of my course the other day did. Started leg C up in the E minis. Once you get to this level in any chart pattern that has a ChapmanWave with very strong technicals, it's seldom that it'll break down at C. It'll go to D. So that says that we shouldn't get any cell signal. And earliest you can get a cell signal would be on the E-minis, let's say, would be tomorrow has to be a lower high bar than whatever today's high is, and then that's Wednesday, and then Thursday you'll see another one. So Friday would be the earliest that you could get any kind of a cell signal based on the ChapmanWave methodology. In the E-minis, in the SPY, it's the same thing because it finally caught up. No, SPY is in leg D, so it's a little ahead of the game. So because the E-minis trade overnight, something else could happen. That's interesting. And the Dow is, I'll go through all of this in a moment, but let me get back to this before I was so rudely interrupted by my terrible mistake of not putting the charts up in the den for Tiger TV. Save 50% on Basil's CD book, plus get a free month of his newsletter. Now, that's unusual. I don't think I've ever done that before. But because of the response I had, people did sign up for different things, but it was really a number of people put out the question, we'd like at least to start in your CD. We've heard you for all this time. We like what we hear, and we would like very much. I thought, okay, what can I do that would be of benefit to everyone? A benefit to you, a benefit to TFNN, because you could use Tiger dollars for if you have Tiger dollars, you could use some of that for this. The Salvation Army gets a benefit because if you are buying a certain number of Tiger dollars, bam, you will really get right there a discount, 25% discount, plus you get the Salvation Army will receive some portion between 5 and 10% of your purchase, and you get the tax deduction. It's in your name. I think, being basically a business channel right here, I think that's nice. Now, the reason why I wanted to throw in my opening call, and what's fascinating about that whole thing, is that if you like, you can unsubscribe right away. You can just take the month, and then that's it. If you don't like what you see, I suspect if you start to get a feel for what you're looking at, you're going to want more. And because of that, your subscription can continue just at the regular price, monthly price, and you can cancel at any time. So it's entirely up to you, but you will get the 1 month right there free with my CD. So that's normally it's $249. It's on sale for $124, half price sale. Plus, I'm throwing in my opening call, $128 value. So basically, for I'm giving you $4. How about that? I'm giving you $4 to try out my service, and you get the CD, which is a book. Basically, it's a book, 470-something slides. So right here, Tiger TV, boom, right there. Introducing the ChapmanWave methodology from slide 1. It's a PowerPoint presentation, right through 476. Now, I've had people who've turned this into a book. I've given permission for you to print it out for yourself, no one else, but for yourself you can print it out. It does make it rather large, but all you need to do is you can go to the side here, and when you print, put it into the mode that says, I don't want to mess anything up here, so let me just see if I had to do this. Print, post to multiple, portrait landscape. I think you're able to get it as a presentation, and that would allow you to put, say, 6 slides or 6 charts on a single page, and that'll really make a big difference. Anyway, so that's that. It's right there on sale. You don't have. This is the period to do it. And if ever you want to be learning about chart patterns, let me just go through this now. I'm going to go one step at a time. So this is my CD book, Chapter 1, Getting Started, Chapter 2, the technicals, Chapter 3, the trends, how to identify them, all the terminologies, the bar, what is exactly the bar, what do you talk about a leg? I went through this in great detail. Let's get going. There. Overview of the basic terms. There's a bar. I don't care whether you use candlesticks or not. I happen to like candlesticks only because it gives you a little extra information. And peaks. What is a peak? What is a trough? What is a leg? How do you go from, this is what we studied during my webinar, how do you go from a buy signal to a buy mode? There's 4 prerequisites to get your confirmation that it's going to go to C and D. Why can I say right now that there's a really good it's not a guarantee, but a really good chance that we are looking at, I mentioned yesterday I was waiting for the S&P to get to leg D. At that point, I'm going to get a little bit more cautious. Why? Wait, how do you go from a sell signal to a sell mode? Let's see, where is it? Right there. Buy signal. Yep, there it is, buy signal and buy mode. The process in real time, it's all very well talking about it, but in real time we did this during the webinar. How do you follow the peaks? What do you do? We even sang the song. The sell signal, frequently asked questions. I give quizzes all the way along. What's this? What's that? Can you do it? And then I give the answer. The symmetry. Now look at this thing, the whole thing with the symmetry. The left side to the right side. Look, when I was looking at let's just go right here, at the Dow. Look at this beautiful symmetry that I drew, and I chose the point of contact at 12,452. And I went all the way back, and I showed that green, that's that green, and I chose a particular candle for my plumb line, the midpoint line. Sometimes it's exactly at point D, sometimes it's not. And look what happened. Let's just get this big sunshine thing here. That should be over there to show the similarity between the rally we've had in a rising wedge formation back from the June 4th, 12,035 high to Dow 12,898. That was to peak C. We've already gone to peak E, except for one thing. We have broken out. We've broken above it. So I have no choice. I have to go right. I especially waited to do this while we were on air. I have to go remove. I can keep that because that is still a support line. But the resistance, broken, finished. So what am I looking at? I'm looking at, wow, this is interesting. I'm looking at, I didn't expect to get to it right here, but it was the target on the upside. It was all that resistance at 13,290. I've even got a left side, right side, price time match, which comes into exactly today. That is unbelievable. I don't know. I didn't want to make it dark. I wanted to make it light, but I'm going to make it dark just for now. So let's do this. I want you to know what you're looking at, what I'm looking at. I want you to know why. It's all very well saying we're going up, we're going down. I want you to know the reasoning behind my, there you are. Now I'm going to make that nice and thick just for now. I'll take it away later. So that's down, and I'm going to make it nice and thick. So wait, we go right to there. So you see that? From that bar, keep talking about this ugly bar over here from the 7th of November. The real ugly bar was from the Doji candle, and then the breakdown on the 23rd of October with a high of 13,344. But my first level of price constraint is at 13,290s. Well, we've gone to 13,282 today. Now I'm going to show you the right side. This is the methodology we worked on, and I described and demonstrated over and over again on Thursday and Friday during the webinar, during the live webinar. That's the reason why I want the book to go out. This is exactly it. Do you see the V-shaped pattern that I've got here? The left side, right side price time match was set on the 11th of January, 11th of December. That's today. There should be a test of the left side, all those price highs. Well, we're doing it right now. So that in live color right there is exactly. And why was I so positive about it? Why we have 4 longs, no shorts, and I've been desperately trying to add a couple of other shorts. We did add one. No, we couldn't get it this morning, not yet. So one of the reasons is that as long as we are walking that maroon line of the 9-period exponential moving average, I'm going to have to change all these things later on for my subscribers, which I show every single day. I'm going to style. I'm going to make this a little thicker because I want you to know how moving averages can be so potent. What I was describing to my attendees for my webinar and Thursday and Friday is that if you use certain moving averages, let's go to the nearest one, which is the 9-period exponential moving average. This is that maroon-colored one, here, mauve, maroon, whatever, maroon I'm calling it. But look at the fast-moving average of the MACD. It is still powerful. The Dow's up 110 to 13,279. The S&P, look at this. The S&P has finally gone to leg D. I needed that. I needed that before I could even think about a sell signal. Now I can think about it. Do I have to implement it? Not necessarily. But look at this. Left side. Left side to the plumb line. You've got to learn where the plumb line is. That's very important. What is a plumb line? A plumb line is the vertical line that you can use to be able to gauge how many bars from the left to the right using another technique called the ChapmanWave inside wedge gives you a chance, a very high probability that you will be able to identify a decline in an arch or an inverted V or a cup or a V-shaped formation will take place. And it gives you the time period. And that said, the time period should have been to the 13th. Today is the 11th. It's so far 2 days early, but the level to look at is 1434.27, and so far we've gone to 14.31.77. So, thought I'd just cover those things. The CD introducing the ChapmanWave methodology doesn't talk about moving averages. That's a different CD, but it does almost everything else. It does talk about the moving.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. While we were at the break, folks, that's the beauty about the den. You can see what we're doing in between the breaks. I answer questions, all sorts of things. And, in fact, what I was doing is I was showing the Qs, the QQQs, the Power Shares QQQ Trust Series 1. They were trading at 66.22. And I typed in at 11.22 on 11.12. It needs 0.13 cents for leg C. All of a sudden, it needs 0.04 for leg. Oh, didn't say that should be leg C. So look what's happened. Even as we are talking, the methodology is proving itself, because the last high was 66.37 on the 3rd of the daily chart on the 3rd of December. Suddenly, we're at 66.34, 4 cents, and it starts leg C. Now, if it goes to leg C, that doesn't mean to say that this particular chart is guaranteed to go to a D. There's a slightly different chart pattern, but everything about it says that we should be going higher. So I want you to just demonstrate that in live, and I'll go through all the numbers in a moment. But most importantly, I want to get to our callers, and we've got Freeman in Dallas. Hi, Freeman. How are you?
Hey, Bob. How are you doing this morning?
Very well, thank you.
Hey, Bob, I'm on at Look at Lumber Liquid Areas, but before we do that, I got a question.
Yes.
I was in Zillow this morning, Z, and I tried to raise my stop. And for some weird reason, I put a limit sell, and it sold me at 27.80, and then it went up. So I don't know.
Well, first of all, I didn't get to talk about that in my webinar the other day. I did talk about other techniques, but that is something that happens at some point to all of us. I had an experience. Well, I've had many experiences with this. A couple of experiences have cost me a bunch, and because I do so many things during the day that if if I don't completely get out of my short-term trades, when I say get out, I mean if I do not actually take it right off and then shut down and just don't even have it up to be able to place any more positions. I have had situations where I thought that I'd gotten out of a trade perfectly. Well, I did get into the trade, but for some reason I double-clicked. So what happened is I got out of the trade, and then I got immediately back into it without realizing it, and I'd open up the browser, whatever it is, later in the day, or sometimes it would be a day, sometimes it was 3 days later, and I'd be in the trade. And I could have given back a chunk of that, or I could have made... But it's a horrible situation. All of us have made mistakes. We either bought or we've sold. So all you have to chalk it down to is to be a lot more careful. That's number one. Easier said than done, because what happens is in the thinking of all the different possibilities, as you were probably doing, you just got a little careless in the actual application of what you were doing. So yes. Now it's gone higher than you got out at 28 watt?
I think I got out at... I think it was it went up to 20. I think I got up at 27.80, I think.
And now it's 28.58.
Yes. So I got up at 27.80.
And here's the problem. For my work, this is the problem. It's in leg D. So I could, otherwise I'd normally say, get right back in. But let me do the 120-minute chart A. Folks, we're looking at Zillow. The symbol is Z, and it's in leg C up in the 120-minute chart. Oh, I know what I'm going to do. This is a very, right here is a difficult position because my daily charts on the Dow, the Dow and the diamonds are in leg E. The S&P just started leg D, and the Qs are a little behind in making leg C. But you could have a couple of lagging indicators. My thing is going to be focusing on the Dow, probably also the S&P. But the Dow, if the Dow is starting to give me even a short-term sell signal, I'm gonna have to take it. And most of the stocks that I have, which are doing very well, are in leg D or E. So I need to be a little cautious here. Now, it's really tough when it happens to you. If this happened to you as you're possibly going to leg C, I'd have no problems. I say, you know what, start a tiny position, and if it pulls back to the 9-period moving average, and that acts as good support, add a little more, and then you're back to where you were. This is kind of tough. This is kind of tough because there is a good chance, well, if you don't mind, I'm just going to break off for 1 second to talk about something else. Because of the pattern that's unfolding now in the Dow, and because the S&P, I'm jumping in a chart. Oh, there's the break. Freeman, can you hold on?
Yes.
Okay, hold on, because we need to talk about this to see whether or not it's worth... Oh, I thought it through. I'll be right back. As soon as we come back, I'll be back with Freeman. And I wanted to mention moving averages are mentioned in the CD based on the stochastic and the MACD. I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, we're back. Basil Chapman. The Dow is up 115 at 30,289. The S&P is up 13 at 1431. The Comp Index is up 40 at 3,027. Gold is down $7.707. There was a period where euro and gold and the market went together. I don't think that's happening. I think gold is in its own, I'd like to call it a bear market. I think the stock's in a bear market. I think gold is in a declining lower highs, lower lows phase until it retests that left side monthly low. I'll get to it in a moment, but it's still got a way to go. Silver's down 40 cents at 32.89. Platinum's up 8. Now, high-grade copper was doing fabulously. It's only down $1.4 right now at 369. Crude oil is at 85.37, and bonds are down 24.30 seconds. I think that's going to be very important because remember I spoke about the dollar. The dollar's down 24 cents at gold and dollar down together. You see, we're losing those symmetries that we had, the Bach correlation, where you have counterpoint, where one goes one way and the other goes in the exact opposite direction. So now, I've gone through that. I can go back to Freeman in Dallas, who's waiting. We're looking at Z, and he had a really nice trade, and instead of putting in a stop, he put a limit, and it hit, and he got out of the trade. So Freeman, you made a little bit, but you didn't make as much, of course, as if you were still holding, correct?
Yes.
But I think you're looking at this more as a potential position to try to get back a chunk of the gap that it dropped from 34. Is that correct?
That's correct, yes.
So now let's do this. I thought it through during the break. I don't want to go into all the fundamentals because I've spoken to a number of real estate people who say they do not like Zillow at all. And one person told me about Zillow. She said there is just one little thing. If they had to do that, they would improve their site like 200%, and I'm not going to tell them what it is because it suits them not to do what it is. And she told me what it is, and it's really interesting. It's the dumbest mistake. I can't believe they're making this mistake. However, that's their problem. So I'm looking at Zillow, and I'm saying at 20.59 in peak C, I'm going to make a recommendation. Think it through. You don't have to do it right away. I think you've got a little time here because the market should have a little bit of a pause as it's deciding now, has it done everything for the day, or is there going to be another squeeze to the upside? And I'll talk about the politics and I'll talk about the market when we're done. Right now, it's really what I need to talk to you about. If you're prepared to put back something like half the position that you had, I think that makes sense. If you put back half the position, because it's already moved up quite a bit from where you were taken out, my thinking is this. It's a stair-step move. It's not great yet, but it's avoided the M-shaped pattern. It looks to me like I can actually put the curve in to say, hey, this thing wants to trade somewhere toward the, right there, somewhere towards 30.38 is kind of the target that I would have. My recommendation then is to buy a little bit now, have some patience. It might mean that this is the only position you get because all of a sudden it starts leg C extension or it starts leg D up and you just don't get your second position. But I'm trying to moderate the risk because if there is a risk, it's because it isn't a spectacular move with a stochastic at 80%. And I love 80% or higher in the stochastic. It's only a 64%. It might need one little test of 27.65 somewhere around the 9-period moving average, which I'm sure you're looking at. So that's what I'm going to suggest. I'm going to say, start a little position here. If by the end of the day it acts quite strongly, then what I would recommend on the next pullback, even though it's leg D in the daily chart, on the next pullback, you'll see where it stops. If it doesn't come even close to your entry point, but in fact, it's holding very nicely in the 28.70s after having maybe hit 29.10, then I'm going to say you might want to add a quarter. So let's say there's a whole position that you had now, whatever percentage it is, you're going to add about 50%, and then you will add a quarter on a test on Wednesday or maybe Thursday. But right now I'm getting to the stage where I'm looking at just the chance that politically there's just been too much anticipated good news. We need that foot. I've got my foot hovering over the brake as long and at the accelerator at the same time. You want that real sudden pullback to decide whether or not to add back to the whole position back to Zillow. I don't have to tell you that you missed the best opportunity. But I think that going in here with half of what you had makes a lot of sense because Zillow might be in its own little orbit like Hewlett-Packard is, having been just slammed, that it just needs, like a cork in water that you push down, it just needs to bounce independent of whether the market comes down. So I hope that helps you.
It does. And Basil, could I also look at lumber liquidators? LL.
Oh, man, lumber liquidators. This is my perennial bogeyman. It's the one that I've looked at for years wanting to buy, and now I'm looking at it as a potential short, even though I think I heard the guy on 5888. Let me just type that in, 5888 high. The guy, I think it was on with Kramer, I'm not sure anymore, but it's a fantastic story. I think they might have made a top, at least for the shorter term. How lumber liquidators test the low of 47.31. Folks, we're looking at lumber liquidators. L is the symbol. It's just been absolute, to say it's a stupendous stock it's not giving it its due, because this thing, folks, in my CD, I do not talk about the 200-period exponential moving average. The whole development of that came after I'd made the CD, but I've spent a lot of time on the show, on my webinars, on my seminars, on my live webinars that I've done on TFN, talking about moving averages, about the 200-period moving average. It took off from that back in 2008 and 2009. It went to peak A, B, C, D. That's the requisite of the Chapman wave. It pulled back, and this leg here I've got as either brand new leg A or old continuing leg E, because it had 3 doji candles fractionally above the 200-period moving average in August of 2011, September of 2011, and October of 2011. That's a year ago, and in 1 year, it's gone from $13.70 to $58.80. That's almost a fourfold rise, 300%, 400%. I think it's going to come back. And I'm putting it into the same category as in the home building section, that there are some stocks that have done absolutely fabulously, and they look a little tired. Even Home Depot's made a peak F daily, a peak E, if it doesn't make a new high this week, and the monthly might be a leg F. So I didn't even ask you, which way were you looking, to buy or to short?
I'm trying to go long based on the low stochastic, because it's when I actually started half my position at I think it was 49.90, and I put my second position at for 48.50, I think.
47.89 is the target for the downside on October the 12th. That's the low bar. Well, first of all, if it takes out 48.63. There's a left side, right side. In fact, let me do this on air. I'll do this right now. There's a left side to a very important candle right there, which it's almost at. I'm going to be a little conservative. I'm going to stretch it out to the low there. And let me just do this 1 second. Oh, that's green. This is green. And I'm going to do this right here, make it red. And that takes you to... Oh, it's too far. It takes you to the 18th of December. That 18th of let me just see if I can draw a trend line. Yep, perfect. Trend line goes right. No, it doesn't. It goes... Yeah. Between the next 2 days and December the 18th, I'm suspecting that Lumber Liquidators is probably going to test this trend line right here of 48.33. And if it takes that out, it's also taking out the important low, 48.63 on the 23rd. My target is the area between 47.89 and 47.31. And then I would look at a bounce position. And if it doesn't take it out, that will be very positive. But the weekly chart says, I actually wouldn't be looking at this as a long stock right now. So be very careful. Think twice about this. Think twice about the second position. You can see what I'm looking at, right?
Yes, I can.
Okay, so I'm not looking at liquid lumber data as a long, unless it successfully tests the 48 and has a real nice bounce, and that bounce can take you to 51.88 area, and then I think it starts to come back down again. So you might have a good trade, but as a position play with 2 positions, I'd be real careful. Gee, I hope that helps you.
Thanks, Buzz. I appreciate that. Thank you.
Thank you very much. Folks, we're going to go straight to Ben in Tallahassee in Florida. Hi, Ben, how are you?
Great, Basil. How you doing?
I'm very well, thank you.
Super. I apologize I missed the beginning of your show, but with the SPY now, I think in leg D, looking to put a little short on here. You think this is a good spot?
Well, let me put it to you this way. First of all, this is leg D, and it absolutely defied the previous arch formation that I just put in as a suggestion of what we were looking at. Most importantly, there's a pattern that I call the ChapmanWave flat base restart. And that's a particular pattern that occurs in a bull move that sees the price move down quite sharply. And then what happens is, this is in chapter 24, let me just go there. And then what happens is, only if it takes out the resistance significantly, like there it is, on this is slide 393, the best one's the next one, on slide 394. and it shows you that it looks just like an axe handle, and then you got the axe blade, which is a cone, a descending cone. So what you see right now in the SPY is that it is testing exactly what I had drawn. Now, I don't know if I ever showed this, because I think I was drawing this the other day, so I don't know if I've had a chance to show it on the SPY. And it shows right here, the SPY, although the technicals are superb at 89%, and the MACD is very strong, stochastics at 89%, the on-balance volume in leg 3 up, this is leg C up, is close to turning down just briefly. So this is what I would suggest. Now, I've mentioned it, and I'm going to talk about it again, that there's a technique in the ChapmanWave which I think we might be seeing here, and that's where it's both a psychological and it's a physical presence. And that's a pattern that I call the ChapmanWave stork leg formation. I was trying to find the chart during the break and I wasn't able to. But basically what happens is it goes straight up and then it makes an oval formation. Oh, wait a minute. It's right here. There it is. It goes straight up, makes an oval formation, and then it goes to so the leg. A stork stands on one leg, and it's got this huge body, and the wind blows, and it's raining, and it's everything, and yet it's just solidly on this little spindle of a leg, and it makes an oval formation, which is the body, and then it breaks out above the top. In this case, it was June of 2007 at 13,692. Isn't that interesting how close we are to that? And then what happens is it breaks out for the neck, starts the neck, makes the head pattern, which in this case was on the 17th of July 2007 at 14:021, and it pulls back, and that's the beak. Well, so far, with all the shorts and everybody, and the fiscal cliff, the Niagara Falls, everything's been the exact opposite. We've been going up. So this is the psychology of every single dip has been contained and has met with buyers. I haven't got a confirmation. I'm just throwing out the idea. We've got to be careful that for a little while still, a little bit more of December, we might be seeing this particular pattern unfold. Now, you're talking about a short-term trade, right?
Correct.
Okay. Now, if you're looking at a short-term trade, my eye says, not yet the technicals, but my reading of the technicals says that there's a pretty good chance that there's going to be some disappointment politically. It just never goes on so happily. This is impossible. I don't believe what I'm seeing. I love the charts, but I'm not believing what I'm hearing. The market is believing what it's hearing. And I would conjecture that knowing Harry Reid and knowing Boehner, my suspicion is something is coming down the line within the next couple of days, and that we're going to get a fabulous put opportunity to buy puts or a short opportunity in the next couple of days. How you do it is going to be tough, because look at this. The S&P's up 13. You don't want the SPY to go against you, for as much as this. So the timing is going to be very important. So I'm going to my 120-minute chart, and I will do this 120 chart on the SPX. And that's in leg D, just sneaking above 1433.38, the previous high. No. 1434.27. Yes, it did. It's just snuck above it. It's in the resistance area. I don't have anything technically that says that it should pull back. I'm going to make a suggestion, since I know you watch this closely. And the suggestion is hold off until about 3 o'clock. If you see that the market is having you know what, I'm not going to just throw it out in a couple of seconds. I'll think it through, and I'll give you the wrap on the SPY or the S&P, whether it's short, as soon as we get back, and then we'll go to Dan in Basking Ridge, New Jersey, about the IWM. Basil Chapman, right back, straight after this message.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and I have to thank some of the people in the Den who've just, one in particular who's just made a purchase of my CD. Folks, I mentioned at the very beginning of the show, go to the front page of TFNN. I've got a very special going on. You can save 50% on my CD book called Introducing the ChapmanWave Methodology. That's number one. And number two is I've thrown in, so that's a 249 value that you're going to pay $124, and my monthly subscription is $128. I'm throwing a monthly subscription in for free. I'm paying you $4. Not only that, you get Tiger Dollars, the worst. Go to the front page. Please check it out. A most fantastic gift to yourself for the season. And now let's get back. You know, I'm looking at the SPYs. I can give you a very good reason to go short right now for a quick trade. I'm looking at the IWM breaking out to leg C. I'm looking at the IYT, which is breaking, and the weekly chart of the IWM is breaking the ChapmanWave falling X formation. That's chapter whatever I said it was, falling X formation. I think chapter 24 in my CD book. And I don't think you're going to get that many points at this particular. So I would rather wait to see if you can get in on the long side. So I'm gonna all I can say to you is, if you want to get a trade on the you go short via the SPY or what?
Yeah, I was just, like you said, I was just looking over the next week.
So then why don't you, all right,
yeah, go ahead.
I would look for a better one when I've got the Qs and D. I would wait. Maybe options Friday is going to be perfect. Let's talk about this. I might be giving you the wrong information, but I feel comfortable saying let's wait until Thursday and we'll prepare to see if there's either an option trade or a trade coming in Friday or Monday to the downside. I'm real close to at least a decent a couple of 100-point pullback if things go. But believe me, if the ChapmanWave Stork-like formation, the chart that I showed on the front page here, right there, Tiger TV, if that pattern's unfolding, it's going to be very exciting. So I'm holding off, and I would only say for 315, the market is starting to pull back. If you want to get a quick trade, okay, I'm just going to avoid it for now. Hope that helps you.
Good,
thank you so
good.
much
Thanks,
for calling. And we're going to go. Don't forget, folks, at 12 o'clock, Victor Jones, Eastern Time. Victor Jones comes in next with the options hour. Fantastic show, Think or Swim from Chicago. Please stay tuned. And let's go to Dan in Basking Ridge, New Jersey. Hi, Dan. How are you?
I'm doing well, Basil. Thank you.
Good.
Basil, I am, as a matter of fact, along the same lines as your previous caller. However, I am short on the IWM.
Ooh.
Yes, and the way I saw it right now, it looks like the third gap of a potentially three-gap play.
In the IWM on the daily?
Yes, sir.
The gap has to be a gap that you can see. I know some people take it from the close to the open. I take it from the high bar to the low bar. I only see this one as leg C, and the MACD is at 90%. The MACD is very strong. The stochastic's at 90%, and it's breaking out in the weekly chart. And my 120-minute chart is. Let's do this before we run out of time. If you are short, you don't have to jump in and do something now, because I can see a little bit of a pullback coming from this level on the very, very near term. But please think about this. If this is only leg C up, C can continue, or you could make peak C because tomorrow there's a lower high bar. And that'll give you an opportunity to at least get out. But please take something off. You have to do that. Do not get stuck behind the 8 ball. It is horrible unless you have a great technique where you can jump over the ball, which is real tough to do if you know anything about pool or billiards or snooker. This is not the place to be. I would just keep your capital by preserving a mistake that you've made and get out as smoothly as you can. Think about taking some of it off now, and if there is a pullback, then put in a buy stop so that you feel comfortable saying, that's the level I'll go out. If you want to keep some on, that's fine, but think it through, because this is very strong action. You could easily get a turnaround by the end of the day, but do some money management, okay?
All right, then, very good.
Thank you very much, Dan. Thanks for holding on. Folks, stay tuned. I'll be back tomorrow.
Are you looking